All right. Okay, you can see the screen. Document visible. I see a thumbs up. Oh, cool. All righty. Yeah, a few topics that I have in my mind. Definitely want to, spend some time on what's happening in the market. Uh, Roaring Kitty is back, and we see the impact of that in the market. At least this time, it's not that much as it was in 2021, but nonetheless, yeah, I do want to talk about that. And then this week we also had a lot of 13Fs being filed by institutional investors. So yeah, we'll go through, I think, a bunch of those, including some of the investors that we regularly follow and we discuss, in this call. We'll go through those. Um, Talk a little bit about the crypto side because there was I would say I shouldn't say historic just yet, but there was an very positive movement. So do want to talk about that. I heard a podcast and I thought there was some good learnings in that podcast, some money lessons. Want to talk about that and something on a Google. What else? Do you guys have anything else in mind? This is for you. I make the content so that after spending 2.5 hours, you shouldn't go back and say, hey, half of the time everyone was silent. I've been in such meetings. I've been in such meetings wherein there is nothing was prepared, and then we're like looking at each other who gonna talk or who gonna bring up some topics. But if you have any topic that you want to talk about or want to bring up for discussion, do let me know. Okay. All right. I am not done with my coffee yet. So give me a couple of minutes and we'll get started. Oh, let me see. Okay, before we start, any first timers here? Anyone joining for the first time? Uh, True says yes. Dhruva. So Dhruva, go ahead. What brings you here?
Well, I am just a
All right,
beginner
just
into.
hold on. Something. This is what happens when I change some settings at my end. I am really not able to hear you. Okay. Well, hold on. My apologies.
Noise.
Okay, can you say something?
I'm audible.
Oh, yes. Thank you. No, the issue was at my end. Now it's
Great.
fixed. Yeah.
Awesome. Well, thank you for organizing this event in the first place. And this is my first ever seminar that I am attending for learning anything about stocks. I am a beginner to start with. And looks like it. You guys are already at discussion number 223. But nonetheless, I'm excited to learn the insights from you people. And then after this discussion, maybe I'll go back to see what topics that I would be interested to learn. Maybe for next session, I would come up with any questions or ask. But for now, I would be a good listener. That's all I could say.
Sounds good. So you said that you are completely beginner, right?
Yep.
So let me, because I have in one of our previous sessions, I have covered some stuff which is like, hey, if you're starting just as a beginner,
Hmm.
before even you think about investing, what are the some pre-investing checklists that you should have? What then how you start, how you get your feet, just get your toes dipped in water. So um, yeah, just send me a message on the meetup to remind me, hey, can you share the recording or the number? Then I can share that recording, the episode number with you. You can go and view the recording on my website.
That would be awesome. Thank you, Vivek.
Yeah, I have covered in one of our previous sessions in terms of, I think it was spread over 2 or 3 sessions, in
Hmm.
terms of, hey, just starting from scratch. Okay.
Sure, I look forward for that.
Sure.
Thank you again.
Uh, hey,
Can you
Veronica.
continue?
Yeah, what brings you here?
Hi, can you hear me okay?
Yeah, we can hear you.
Yeah, so I'm interested also at the beginner level, a broad overview, all these topics, the money lessons, crypto, everything that you have listed is what I'd be interested in learning more about. It's hard to, you can only read so much, but it's really hard to like connect the dots, right?
Yeah, yeah,
Of people who have been investing.
yeah. And and investing, like I said, I mean, talk about it, it's a very lonely profession. It's always good to talk to other investors and see what they are thinking. And that's the reason why I do it. I get to talk to other people. Otherwise, it's a lonely profession.
Yeah.
So
Yeah, and it's very intimidating.
yes, yes, and everyone starts at the same place. I mean, I also started when I started. It was very intimidating for me as well, but then over the year I learned, and then during COVID, I started this meetup because few of my friends wanted to get in, and it was just started as a hey, three or four of our social friends because we were in COVID, so we started with a Zoom meeting, and then I said, you know what, I'll just create a meetup, and we'll do it over there. So now it's been almost 4 years. Niyanka says, would you please share beginner session number with us as well? Sure. Let me take note, Niyanka, and yeah, I'll share that. Joe says, option contract pricing relative to Greek row interest rate. I've noticed that pricing models have adjusted that percentage in their allocation. This is very relevant for time spreads. Yes, I don't know how much details, Joe, you want to get into that, but we have never spoken about or really cared about row in the past because interest rates were close to zero. But now interest rates being higher, the impact starts to show up, and that's why we are seeing our calls are being the calls are giving much better premium than what it would have given in the past. And that's why we also seen since 2022 lot of instruments which make use of selling calls now coming to the market. Talk about buffer ETFs, talk about 100% protection ETFs, right? And annuities that make use of this. And I think over multiple sessions when I read about these, I bring those things up. And why all this coming up right now is, yeah, it's a impact of row. You are getting paid for selling those calls. And you rightly said it is very relevant to the time spreads because if you are going out in time, the row does impact you. Again, I'm individual investors, so not too much. I would say, yeah. I mean, that's all I focus on. Maybe I'll read more about it, and we can bring it up for discussion next week. Impact of row. Row was one of the Greeks that I generally not paid much attention anyway. But nowadays, over I think last 1.5 year, it has become more interesting. All right. Anyone else here for the first time? Cool. All right. So let's get started then. Cool. Thank you everyone for joining today on Saturday morning. Today it's actually, at least I can see outside my window, beautiful sunny day in Bay Area. So I appreciate all those you are from Bay Area, sitting here and attending this instead of going out and doing some fun activities. So thank you. Thank you to others as well. I know a bunch of folks are from Michigan, someone from Iowa. So thank you all. So today we are discussion number 223. So like I said earlier, all from Sacramento. Cool. Thank you. Uh, who else? Let me see what else. who else is joining from where? Ventura. Ventura, nice place in SoCal. We got Sacramento, we got Michigan, Iowa. I already kind of told Bay Area, so that covers all the cities in Bay Area. San Jose, Fremont. I know a couple of you are from Fremont. Nianka is from Bay Area. I got Irvine. West Hollywood. Fremont. Fremont is like Fremont is now like you can call it as my second home because I end up spending many hours in Fremont. I have to take my kid to Fremont for her after school work, and then I end up spending 2-3 hours over there. Who else? Yeah, that's it. That's the geographical spread. No one from Canada. I know earlier someone from Canada used to join. We got there. Vancouver. Oh, Vancouver, Washington. Oh, we should have in-person Fremont meetup. Yeah, yeah, could be possible. We can do sometime. Actually, I ended up in I twice I ended up in a meetup in Fremont on Sunday. There is a meetup that happens first Sunday, and I attended only two because I happened to be there, and then I had a few hours to kill, and but the host never showed up, and like 3 or 4 people will meet up and will just talk about stocks. So that happens on first Sunday. So if you're in Fremont, uh, you can join there. It's in the Hilton on the Mission Boulevard, Hilton
Yeah,
Garden in
I
that.
went there once and nobody showed up
Yeah,
there.
I've been there only twice in the last 2 months because I happened to be in Fremont and no one host doesn't show up. Only like 3-4 people showed up. All right. Okay, so let's get started. Yeah, so we are in discussion number 223. So almost 4 years. Today, I want to talk about, give a little brief on I'm watching in the market in terms of what the heck is happening. This meme stock are back. And, as an investor, how we should, tread the waters in such a market. Number two, 13F filings. A lot of 13Fs have been filed by a lot of investors that I personally admire. So do want to see what they have done in terms of changes that they have done in their portfolio. Not that we're going to blindly follow them, but just to know, what some of the big institutional money is doing. Right. And then, yeah, a couple of money lessons from a podcast. I got educated by listening to that podcast, and so want to talk about that. I want to talk about a little bit on the crypto, some positive development in crypto in the positive direction. We'll see what Joe Biden does. Want to talk about that. Some update on, I think I have some on Google and anything else. Right. So that's the agenda for today. As always, anything that we talk here is not a financial, tax, or investment advice. For some education, a little bit of an entertainment if you can find any. But yeah, it should be more for a fun. Okay. Topic, as Gen AI booming, prediction is more and more energy will get consumed. What are your thoughts on that? What are the energy companies and ETFs you following? Okay, so that's also a segue. When I talk about Google, I will talk about in terms of overall AI stack, and then at each layer of that stack, what are the investable opportunities, right? And if you remember, Niyanka, I think it was last week or a week prior to that, I'm like, utilities is a new AI, right? Look at a XLU. Let me just bring up XLU. And you hardly see utilities outperforming, the SPY, but in terms of year to date. But this time they are, because a lot of, I mean, if you are running your Gen AI models, you will need those chips will consume a lot of powers, and XLU is up it's a utilities ETF. It's up 12.6% year to date. And where is SPY? Let me just look at SPY. SPY is at 12%. Right? Of course, SPY, this previous week got a good boost. So, but still, utilities are outperforming SPY. And it is because there a little bit of the tailwind from AI is causing all this. Otherwise, in this high interest rate environment, there is no other reason for utilities to do so good. So if you go back and look at utilities ever since Fed start to increase the interest rates, these started to underperform because the lure of investing in utilities is the dividend that they pay out. And when the Fed starts to increase the interest rates, the attractiveness of the dividend, it started to decrease. And when I can get risk-free from a Fed, why do I need to depend on a dividend income with some risk from utilities company? But now with the whole Gen AI, utilities started to outperform because of, hey, if this really catches up as what we are thinking, then we will need a lot of power. And that's why we're seeing XLU like outperforming. Did it outperform QQQ? I know it's outperformed SPY. Let me just put QQQ. Yes, even it outperformed the tech sector. I don't recall when did that happen. But yeah, this year that's happening. Okay. Hey, hold on, let me close out a window to dampen the external noise. Alrighty. So yeah, we live in different times. Okay, so let's look at what is in the market. This one image had caused billions of dollars of movement in the stock market, right? Isn't that crazy? And when people say that Feds should cut the interest, I'm like, no, it doesn't look like, right? I'm still, we are seeing the craziness that we have seen in 2021 back in the market. So for those who probably are not familiar with this, Roaring Kitty, a very famous personality now. Real name is Keith Gill. He was you can call the originator of the whole meme mania of 2021. There's been a movie on depicting his life, which is called Dumb Money. It's available on Netflix. At least it was a couple of weeks ago. So if you have not seen it, it's an interesting movie, good movie, which covers the events of 2021. How a bunch of retail traders banded together and kind of a bankrupted the so-called smart money Melvin Capital, right? And because they just pumped up GME. And it started with the GME. Roaring Kitty, Keith Gill had its fundamental thesis of why the GME stock could go higher because it was the short positions were more than the 100% of a float. And so if anyone can push the prices a little bit, the shorts will be forced to cover. And then we know all that had happened in 2021. So after the 2021 mania and after the congressional testimony and all that stuff, once the meme mania was over, we didn't hear anything from Roaring Kitty. The last post from Roaring Kitty was in June 18, 2021. And now May 12th, all he did was just post this image, right? And all he's been doing since then is just posting some, clips or videos from any movies. Okay. And just posting this image. And, this is what it says. There's so much of a, I would say, mania or casino mentality in the stock market. All the degens are YOLOing again. Look at what it did to the GME stock, right? Trading close to $10, $12. suddenly shot up to 64. As if anything has changed in the GME business. Just because Roaring Kitty came back, like everyone is now trying to pile into the call options and see if they can hit the lottery ticket. So it's become more of a casino than the stock market. And I was looking at the stats on Friday, 96 million shares in GME traded on Friday. 96 million. This is way, way higher than, SPY or Tesla shares that have traded in the market. And looking at a call volumes for the next week, 20 price call volume, 18,000, 25, 14,000. This is like typically retail investors. Like we love these whole numbers. 30, 22,000, 35, 3,700, 40. So still excessive call volumes, the volume on the call options, trying to, I would say, trying to do the same gamma squeeze that we had seen in 2021. I don't know whether you can do it or not. I don't know if the short position is as big as it was. It was 100%, more than 100% short in 2021. What's the GME short float now? Let's check out. I don't track the stocks. I have no idea. So it's only 24%, right? Maybe a lot of maybe covering has already happened. Who knows? But stuff like these gives you opportunities if you held GME for a different reason, right? And it's not only GME. During the meme mania, we saw a lot of other stocks. Another big one is AMC, right? So all those so-called meme stocks, they just had exhibited similar behavior. May not went as high as GME, but volatility was still high. Look at this is like BlackBerry. He was happily trading at $3, close to $3, went shot up almost to $4, and then came back down. Another meme favorite, AMC, from $3 all the way to $12, right? And then now back down to $4.50. So this thing end only in one way, which is people get burnt. Majority of the people, it's only end up in tears. So I don't want to play in trying to make money out of it, on buying these call options, etc. It's like a lottery ticket, just doesn't work out. So not my play. But if market is presenting you some opportunity, I will be happy to take advantage if I already have some of these shares. Right? So I will talk about it. And I'm also saying, and kudos to the management who is taking advantage of this opportunity. There has been a talk in the markets whether the Roaring Kitty is actually a Roaring Kitty, is actually Keith Gill. We have no idea who posted this picture. Maybe he sold his account to a hedge fund. His account is very valuable because he got like millions of followers. So who knows? And the possibility is non-zero, the probability is non-zero. Maybe he sold his Twitter account to some hedge fund, and there is someone like maybe institutional money or some other smart investor. And if as a retail investor, we're trying to buy these and see, and the whole idea behind this was, let's stick it up to the Wall Street guys. All those end up losing money in this are the retail investors. It doesn't end well. So look at whichever way, this is going to end up in tears and ashes. So I hope you stay away from this, unless you had AMC or GME or BlackBerry or any of these meme stocks for a different reason, for a fundamental reason, because you think that this the company is undervalued based on what the business may be doing. And you want to you want to take a bet on that the business might improve. Otherwise, I don't think there is any play or there is any reason why we should be involved. We as an investor should be involved. It's not going to end up nicely. I see Shri says, Sam posts some picture. Okay, that's around the job. I sold options this week, no assignments. Yeah, I didn't have any assignment either. So that was on GME. We looked at BlackBerry. So I took advantage on BlackBerry because I hold BlackBerry stock in my portfolio. I've been holding it since, I guess, 2019. And my thesis was when they purchase Silence, they're gonna get stronger into corporate security, and then they moved into QNX, which is more of their connected car. Their operating system is being used in 200 million cars, right? And then there was a news around they're going to separate the cybersecurity and IoT division, which will unlock some value. So I've been holding those stocks for now almost 5 years. And I still would want to hold, but when these opportunities present, we can make use of these opportunities to reduce the cost basis. So I sold a lot of covered calls because the IV was super, super high. When the stock is trading at $3 or $3.20, for selling a covered call at $6, I could get like 40 cents of premium. Right? That means the share has to become double. And then I get on top of it like 10 cents, means more than 10%. So it's like 110% gain for my shares to be called away. If it doesn't happen, I reduce my cost basis by 10%. I use similarly, I've been selling premium on BlackBerry for now 4 years. And my average cost of buying the shares were like $5.50. And my cost basis currently is now 85 cents, 85 or 95. Right? So I still got like I have to sell one more dollar of premium and then I'll own it free and clear. So when this opportunity present, when the volatility goes through the roof on such stocks, sell some premium, and that's what exactly I did. And now the stock has come back down. All that premium that I sold, it's for me to keep, and I guess it's going to reduce my cost basis maybe to 60 cents or something. I'll see. I'll run the calculation. But I'll still hold BlackBerry. It helps me to hold BlackBerry for longer and longer. We'll see if the business thesis plays out. If it doesn't, still fine, right? I'm not losing much. From my cost basis, I'm still up like 200%, right? So which is fine. David, would you buy NVIDIA before earning release? No, we will talk about NVIDIA when we talk about AI, but I'm not going to buy NVIDIA right now. So you've avoided assignment for all those years. What delta do you use? So I think in 2021, maybe I got assigned, but then I bought back those shares when the stock came down because I still had my business thesis hasn't changed, right? But I don't think after 2021, I had any assignment. So delta that I use is, again, anywhere between 20 delta, 16 delta kind of a time. It becomes hard to sell premium if it is below $5, which this year it has gone below $5. So yeah, then I'll be selling it only if I own 500 shares, maybe I'll sell one covered call. Otherwise, I would have gone into zero much ahead. But I'm not selling covered call against all my position because you never know. The meme crowd will come back in and BlackBerry could go to like $6, $7. So I'll sell covered call only on portion of my holdings so that, if that happens, I can still enjoy the gain, enjoy the unlimited upside on the remaining ones. Oh, otherwise it would have gone to zero cost basis by now. Yeah. So, and why only us? Management also taking advantage. AMC, Mr. Aaron, I didn't like him in 2021 because he was pandering to the retail crowd, especially the meme crowd. But I mean, I'll give him credit where it is due. That on one hand, he was pandering to them. On other hand, he was like kind of selling the shares and taking advantage of those retail crowds. As a CEO, your responsibility is to your shareholders, and they did the same stuff again. AMC, they converted their debt into 160, basically $164 million of a debt. They converted it to highly expensive equity, which obviously will not stay as expensive when they did the conversion. So good job by Aaron to reduce the debt on the company. Same thing GME did. They sold 45 million shares in the market, and those, I guess, bunch of retail investors would have picked up these shares. So I don't blame these companies for taking advantage of these uh, you know these inefficiencies in the market when the stocks suddenly go way higher, completely detached from the business. Yeah, if you have a debt on your balance sheet, reduce it. Even if you don't have a debt on your balance sheet, it's a perfect opportunity to sell some stock, because stock is super expensive, and increase your balance sheet strength, raise some cash. You can always buy back the stock, right? GME is selling a stock when the stock is trading at $50, and then it'll come back down to 12. You can buy it back. So good job by GME and AMC, boss. This is this is another one. I did not know about this until I heard about this in a podcast. Anyone know the FFIE? Anyone have heard about this ticker? It's called Faraday Future Intelligent. Hold on. FFIE. It is Faraday Future Intel. What's the full name? Even the thing or same. Faraday Future Intelligent Electric Incorporation. That stock was trading at 4 or 5 cents and all the way up to $4. Crazy, crazy stuff. So if you think, and I won't blame you, many retail investors, if you look into crypto, the Twitter, FinTwit, many of new investors get excited by these opportunities. Gosh, I could have held this at 4 cents, like 0.038 or 4 cents, made my 100x. I could have made $4. So before you have any thoughts like that, and looks like there is a huge amount of volume that was being traded. 1.3 billion volume of this FFIE was traded. If you really look at FFIE, this company sales like 500, oh, sorry, it's 500K worth of sales. Like, and out of which it's losing $500 million. To me, this is just a fraud company. I don't even know why this company still exists. And like now the market cap is $43.95 million after it's went to $1 from 4 cents. This is completely sham. Right? To me, it may not be legally fraud. Again, I have no idea. I have not looked at this company, but these are the things that we as an investor need to stay away from, right? And here I picked up S&P 500, and what's the volume on Friday? Top 20. Like the maximum was in Tesla. Tesla is generally very active stock, both on the stock side as well as the option side. So $77 million, AMD $65 million, Google, or let's say Paramount, $17 million. Google has 2 tickers, so total is $40 million. And we have whatever this Faraday Future, $1.3 billion, right? So this is where called a frothiness in the market. A lot of greed in the market. Folks are not thinking before putting in money, or you're just trying to hit. Maybe someone will hit the lottery ticket. You know, all that crap. So okay, so I'm getting someone spamming it for. All right, cover. I don't appreciate this. This is not an advertising panel for a company. If you really want it, maybe reach out to me and see what to do, and then we can talk about it. So sorry, I'll have to kick you out. All righty. Okay. So yeah, will happen. Some folks will come in and try to push whatever they want to. Okay, Sam said visitors to California spend $150.4 billion. Have you looked at HIMSS before? No, I have not looked at HIMSS. I see HIMSS is um, being talked about a lot on FinTwit, and I know it's in your same category like Teladoc, more focused on mental health, but I have not looked at HIMSS. If you want, maybe let me take a note of this. And maybe in some other next session, I'll talk about it. How big is HIMSS? HIMSS is being talked about a lot of, I would say, the so-called growth investors on Twitter. You know, HIMSS, Robinhood, SoFi, Celsius. These are like 4 stocks that I see the same group of finfluencers talking about. So billion-dollar sales, no income, market cap $3.13 billion. Sales have been growing like crazy, 55% like year-over-year sales growth, looking at 60% for past year. So it is a huge growing company. And here's my again, I've not looked at the company, but I've seen in past many companies focusing on mental health and online, uh, like a Teladoc or telemedicine focus on mental health, haven't really done great. Some of them turned out to be fraud. Some of them turned out to be, basically pushing out or forcing the physicians to prescribe some of the treatments that were really not needed just to boost up the revenue. So in general, and you can call me this, that, hey, I have a prior bias, but I've seen a few companies that grew very rapidly. Their revenues grew very rapidly, and then 4 or 5 years they were gone, because either they were indicted by FTC for fraudulent practices, or they just couldn't expand beyond it. I'm not saying HIMSS is there. I've not looked at HIMSS. The reason I've not looked at HIMSS is because I didn't have I've seen a few companies in this particular sector really coming out as a flavor of the month and then disappear. But if you're interested, maybe I'll look at it. Doesn't mean any operating income. Let's look at that before I'm even HIMS. Okay, so they've been in public for what, 5 years? At least they have 5 years of financials here. Not made any operating income in any of those. So I would not be interested, because I don't want to add in my portfolio. I mean, it is growing like crazy. One thing I'll give, it's growing like crazy, but haven't figured out yet how to make money. That doesn't mean that it's a bad company. So, have diluted shareholders, but now become a little more disciplined in terms of share dilution. So it will be super expensive, I guess. Yeah, no operating margins, the gross margin. I guess it's it should be expensive from a trading perspective. It's no earnings, so we can ignore that. Yeah, 57.40 for free cash flow ratio. I don't even think we can right now. They're not even at a stage where they want to optimize for free cash flows. I think these metrics won't even apply. Only thing that would apply to them currently is the revenue growth, in which they have done really well. So if you really want to take or if you like this particular sector, I guess, I mean, they are doing well in the given the company stage. They should be growing the revenue and they're doing a good job over there. And I'm surprised to see at least last 2 years they've contained the shareholder dilution. But would I add in my portfolio? No, I'm not looking at a company with such profile in my own portfolio. Right. Yeah. So coming back to this FFIE, right? Before you think, oh, maybe I can now take an exposure in this or whatever. Here's a little bit of history of FFIE. So it has reverse split so many times because it has stayed under $1, and then you get delisted if you stayed under $1 and all that stuff. If you go back and look at, looks like it came in 2020, the shares were like all-time high was almost $4,000. You can imagine $4,000 to $1. Even after this huge bump of like more than 1,000%, right? It is still lost 99.99% of its value. So this is what happens, these things don't end well. If you don't have a business to support whatever the share price is, so yeah, I don't even know. Maybe they had some business during 2020, 2021. Someone said that it's a EV company. I know Faraday, I don't think, is it the same one? There was a EV company, Faraday Electric, but along with the Lucid and all those things came, but I really don't know whether it was this company or not. But yeah, this is how it ends up. Okay. Anyone got sucked into this jump like around what 1750? Probably it's lost 99.9% of its value. So the best way to trade this is not to get into this. That's it. Fred is, I haven't looked at Qualtrim. Some of my friends use this website to invest in long-term stocks. I have heard of this Qualtrim. I've seen this guy on Twitter. Yeah, but I mean, I actually have my own things that I want to look at, and that works out well for me. But Qualtrim is also a decent website. The other one is finchat.io. I've seen a lot of investors using that as well. Now it depends on what you want to look at and what you want to find. Yeah, there are a few good websites. Qualtrim is one, finchat.io is one. And then you see these Reddit, claims coming around. How much did I make or lose? Yeah, you have this fun for the fun stuff. Yeah, you want to bet some bet some of your gamble money into this. Go ahead, but please understand it's a gamble. You're not investing, so don't throw in your monthly bill money or your fee money or your mortgage money into this. I want to gamble it, thinking maybe you are the one who caught it here and not here. Yeah, put in 0.01% of your net worth, you will survive. Just understand this is all gambling. None of them is. Don't for a moment think that you're investing in trying to figure out when to buy this FFIE before it pumps up. That never ends well. Okay, so that was one side of the market where we actually seeing a lot of hype in meme stocks. On the other way, also, market was all-time high. It's the first time in the history of the markets the Dow crossed above 40,000 mark. It closed above 40,000 mark. I think it closed above 40,000 this week earlier, but then on Friday, barely it closed above 40,000 mark. I don't know what does 40,000 really mean. Does it make a huge difference that if it is 39,999 and 40,001? As an investor, doesn't make a difference, but it's a milestone. People would like to celebrate the milestone. So there we go. We had a all-time highs in Dow's. QQQ not really all-time high, but pretty close to all-time high. Look at SPY. SPY hit its all-time high on Thursday, and now it's again pretty close to all-time high. IWM close to all-time high. So the markets are roaring. So if why only the stock side? Look at the gold, right? Gold had intermediate all-time highs, in somewhere in a couple of months ago. But if you look at the new closing all-time high, gold had its new all-time high. So if you want to, I would say last week was the best time. If you wanted to sell, it was the best ever time to sell in the markets. I'm not saying that you should sell, but if you wanted to sell, last week was the best ever time in the history of the market to sell, because it was all-time high, right? When we should sell at the highest point and buy low, sell high. Last week, if you were looking to sell, last week was the best ever opportunity in the history of the markets to sell something. I'm not saying that you should, but if you wanted to sell. So gold and silver. Silver tops $30 an ounce to hit a highest since 2013. Huge jump on silver as well. That is why I'm like, I hold some SLV and I'm like, what the heck is happening? That's where gold, silver, everything high. SPY 1 week performance, pretty nice, huh? Pretty change from what we saw in April, where majority of the things were in red. Now we're back in green. Microsoft up, Google up 4% after Google I/O. Tesla is up 5%. Broadcom 4%. Nvidia 2.8, almost 2.9%. At least this is a little bit different that we've seen in at least maybe last week or 2 weeks. Nvidia is not moving as much as the markets are moving. Like Nvidia has been a little bit stable, right? Not making the 4%, 5% moves, which a lot of other shares are. But anyway, it's been a good week in the market, but 1 week doesn't make any difference. So I won't take out, won't change any of our investment thesis or the way you invest just based on 1 week's performance. So you can, but it is what it is. I do want to just come and share, hey, how the market performed this week. Bobby, do you think there will be no new all-time high anytime soon? Bobby, if I knew that, I'll be sitting in a beach sipping pina colada and having fun. There's no one can tell whether there'll be no new all-time high or not. But I will tell you what I'm seeing. There's a greed in the market, right? Now, can this greed sustain for longer? Maybe. But I want to be cautious when there is a greed in the market. That doesn't mean that the market gonna be cautious, but that's fine. I have no idea. I don't think anyone has any idea. So if anyone tells you that market is gonna go down, probably they're not being true to themselves. FCX, copper stock works for me. There was a copper short squeeze on copper. I don't own FCX, but if you look at, I think copper futures, I don't have future. What's a copper futures ticker? Anyone can help me? Okay, HG. What I heard was there was a short squeeze on copper because China. Again, I don't trade. Yeah, there's a copper future. It's like from March till May. huge run up on copper. Yeah, industrial and China. So S&P sector-wise performance, nothing to complain. I mean, we are up 11%. And 99% of individual investors, we should be just happy holding SPY, unless you're interested in and you love reading through the quarterly report of individual companies. We have no business to own individual companies. We should all be very happy by owning large ETFs. An S&P 500, which represent top 500 companies by market cap in US, is one of the best vehicles to invest, while you're trying to learn about how the markets work. And S&P 500 is up 11%. We're not even halfway through the year. And what more can we ask for? So, but here's a surprise. Like communication, information tech, the tech companies, they generally give better returns anyway. And they also fall high more than the SPY. They're generally more volatile. But look at the utilities and financials. For a change, these very stable company sectors are outperforming S&P 500. Like I said, you don't see these often. Fear and greed index. Previous week we were on a neutral, and this week we moved firmly into greed. This is what the meme mania does, right? Now looks like there is no fear in the market. And of course, no, it's not just the meme mania, it's also the CPI and the PPI numbers CPI numbers that came out. And again, I generally don't talk about a macro. I give my reason. Only will talk about macro when FOMC comes out. But one more factor why we saw such good move or up move in the stock market was the inflation was I think in one case it was it month over month or year over year? I forgot. One of them was below expectation by 0.1%. The other one was as expected. So now if inflation starts to tame, that will give a reason for Fed to start cutting rates. At the end of the day, markets are still riding on the hopes of getting dope from Fed, right? And if getting the dope from Fed, if the probability of that goes higher, this is what we are seeing market, your T-bills, etc., 10-year bills, etc., will go lower, and then the stock market will go higher, rip higher. That's what we saw. So coupled with meme mania plus expectations that the inflation is under control and that Fed will be open to decreasing interest rates, make riskier assets more attractive than earlier, and stocks are generally considered riskier. So evident in the VIX. Look at VIX, which is known as the fear index, is now trading just below 12. I mean, last we saw was that's before COVID. Like right now, the traders / investors perceive no fear. Everything is hunky-dory. Everything's gonna go good. And when you have such a situation, at least me personally, I want to become a little cautious, because now the price of everything that you're gonna go and try to buy in the market will be bid up higher. It's the same way how it will work in the supermarkets. Let's say if you didn't have a defined prices at the cash register in the supermarket, if everyone is feeling good about the economy, I give it for $5. I'm willing to pay it for $5.25. Someone else will outbid me and saying he or she is willing to pay $5.50, right? And when there is no fear in the market, that's what same thing we'll see in the stock market. All the stocks, etc., will be bid up higher, and that's why you see the S&P 500 going higher, whether there's been any change in the business or not. I'm not saying all companies are just bid up being higher because everyone is feeling good about it. There are some companies who probably have fundamentally changed their business. They do deserve, but when you feel good, then you are ready to splurge money. And we are seeing the greed index as is now in firmly greed. So I personally am being cautious. So I'm not gonna close my hedges aggressively. I'm gonna hold it for a little longer to see how those play out. You do what you think is best for you. Uh, Sambasiva asked, which is best time to invest? Is it fear or neutral? If you ask me what is the best time, when there is a blood in the market, when everyone is running out from the market. Let's go back. The best time to invest in the market in last 4 years was here, when the market fell down 35%. But at that point of a time, everyone suddenly turns completely negative, including me, including you. It is very difficult at that point of a time to think, hey, things will become normal. This is a temporary phenomenon. Unless you've gone through some of these cycles and have seen that this is nothing new. But the best time is this. But because it is impossible to maintain your calm and composure, because when the market falls down, it's not just that the market has gone down. There are a lot of other things that happen along with the market going down. So today, when the markets are all-time high, it is easy for me to say, or you to assume, if market fell down 20%, I'm gonna go hand over fist. I'm gonna back up my truck on the market and buy a lot of securities. If that's the only thing that happens in isolation, but that's not how the life will work. When the market will fall down 20%, 30%, probably some of us are gonna lose our jobs. We might see the future becoming more and more bleak. Why will market fall 30%? There will be reasons behind it. Maybe there is a war that might be declared. Who knows? Maybe the world has got a lot of uncertainties. At that point of a time, a lot of other things will come in picture and we will not be able to back up the truck. Our thinking will change at that point of time. It is easy sitting today to say that I'm going to do that. It will be impossible to do it. So as an investor, the best is keep investing on a regular time period, which is what, if you enroll in your 401k, you invest it every 2 weeks so that you can take these emotions out. So I hope that answers the question. What's the best time? When everyone is fearful, but that stuff is impossible to do. That is called timing the market. Best time to sell is when the markets are all-time high, everyone is greedy. How many of us have sold? No, very few of us. When the markets are high, oh my God, it's going to go further. It's going to go higher. We become greedier, right? So that's why it is, as an individual investor, best is to continue invest on a regular time interval, because go back and look at the history of the market. It'll go down like this, but overall, it goes up. It doesn't go up in a straight line. On an average, market return 10% doesn't mean every year it's going to return 10%. 2022, S&P was down 26%. 26% S&P was down. Right? So 26 or was it 18%? Whatever. But you get the point. So that's why I would rather just keep a minimum amount that you can continue to invest every other week, or if you're a little more active, every week. Pick up a day. Friday, I'm going to invest whatever, $200 per week. Come rain, sun, shine, storm, I don't care. Pick up an amount that you feel comfortable and don't get in that. Maybe then you can see, oh, if the market falls down by 5% or 2%, maybe I'll put in additional one. But have a basic amount that you can continue to invest at regular time period. That's what I would do. Yeah, Ramesh just say, I think slow and steady wins the race. Yeah, that's a slow and steady, because it is impossible to time the market. Only people that time the market exist in Twitter and YouTube, not in real life. Okay, so that was on the stock side of the house. Let's talk about what happened on the crypto side. So we continue to see institutional investors taking positions in Bitcoin ETFs. Again, Eric Balchunas, the senior ETF analyst at Bloomberg Intelligence, again, because a lot of this is a 13F season wherein institutional investors, anyone who has more than $100 million asset under management, have to report their holdings. So IBIT, which is BlackRock's Bitcoin ETF, ended up with 414 reported holders so far in the first 13F season, which is mind-blowing, blows away the records. Even having 20 holders as a newborn is BFD. Highly rare. And this IBIT has 414 institutional holdings. Here's a look at how the BTC, which is Bitcoin ETFs, compare to other ETFs launched in Jan. I don't think anything comes anywhere close. This YMAX is the one which is called YieldMax ETFs. Basically, they'll have a synthetic stock position and sell covered call against it to generate an income, right? So this is like an income generating ETF. All the Bitcoin ETFs kind of way outperform the new ETFs that came in January. So we continue to see institutions still now making use of this new regulated vehicle to get an exposure to an asset class, which is still, you can call it risky, frothy, we don't know what's going to happen, kind of stuff. So this is the list of, I think this is sorted by how many units of IBIT, I guess. So Millennium Management, it's a hedge fund. Looks like they got almost $2 billion of Bitcoin ETFs under management. The next one is Schoenfield Strategic Advisors. But I mean, so there is an institutional, you can ignore Susquehanna, Citadel, because those are market makers. So they may not be interested in buying it for their clients because they're market makers. They need to have those positions because they're making markets in this. So, but otherwise, I mean, we are still seeing, still too early. I would say this is still too early because a lot of wirehouses haven't yet opened up for, allowing their financial advisors to even talk to their clients about investing in this asset class. Right? This week, so I think previous week, I mentioned Wells Fargo, Mass Mutual Insurance Company. They bought some. This week, we saw Morgan Stanley, when they filed the 13F, they hold almost $270 million of Grayscale GBTC. And again, this may not be Morgan Stanley buying it, but they are buying it on behalf of their customers, right? So Morgan Stanley they are still reviewing this whole new Bitcoin ETFs to see if their advisors can go and talk to clients. But if a client hear from somewhere else and come and say, it's financial advisor, I want to buy the stuff, those financial advisors are allowed to buy the stuff. So it is on an unsolicited basis. As a financial advisor with Morgan Stanley, you cannot solicit your client to invest in Bitcoin ETF. But if your client wants to, then you are allowed to, right? So I guess a lot of other such big advisory platforms, once they become comfortable, eventually will start to get exposure to this new asset class. That's where the whole thesis of, and that's why I said, if we want to be in this asset class, make a 10-year, 15-year thesis, right? Otherwise, don't think I'm going to get in now and in a year, we don't know where it's going to go in a year, right? So, so that's on the Bitcoin side. The other one big news is around little bit more on a positive side is SAB 121. Before that, let me answer a question. What intervals? Mostly quarterly. So Veronica, if your employer offers 401k, then yeah, it should enroll because that so let me first answer the question. The shorter the time duration is, the better it would be. So if I had, let's say, $10,000 that I want to invest, right? I can do it once at the end of a year 10,000, right? Or I could do it a quarter, $2,500 at the end of every quarter. Or I could do whatever, $800 per month, or I could break it down to doing per week, $200. It depends upon how much, time do you have. The shorter the interval, better and smoother the ride would be. This concept called dollar cost averaging, you do much better in dollar cost averaging if the duration is shorter. But doing it on a daily basis, oh, that's too much of work. So companies, and that's why the best vehicle is you get paid every 2 weeks. You don't have to do anything. If your employer offer 401k, sign up on this. Every 2 weeks is going to go in anyway. So that will be my answer. So whatever works for you, you should pick up. 2 weeks through the paycheck is perfectly fine. Can you do weekly basis on your own? If you can, go ahead. More power to you. Bobby, where did you get this Bitcoin ETF holding data? Follow Eric Balchunas. He and his colleague James Seifert, they are the, I would say, authorities on, or if you have a Bloomberg terminal, which I don't, because I'm an individual investor, right? So I don't want to pay $25,000 to get a Bloomberg terminal. So if you have Bloomberg terminal, access to Bloomberg terminal, you'll have all the data. All right. Looks like other banking giant, JP Morgan, Wells Fargo, UBS, etc. They also have, they hold some. JP Morgan, they hold it because I guess they are market makers. Even though Jamie Dimon keep on saying, we shouldn't touch this, but his bank actually is involved in this, and they also hold Bitcoin. So let's talk about the real big thing, which is SAB 121. This week, U.S. Senate voted to overturn. So basically, they passed a bill which would overturn or repeal SAB 121. So what is SAB 121? If you have not been active on the crypto market, this is like a jargon. And so I'll explain in a very simple terms. So this was a SEC accounting bulletin. It didn't come from your accounting board, but it came from a SEC 2 years ago. What it required digital asset custodians, means institutions that are providing custody of digital assets. Let's say if you buying a Bitcoin, if you're buying a Bitcoin through a bank, which you can't buy today, but you can buy Bitcoin through Coinbase. To treat these digital assets as a liabilities and hold them at a fair value on their balance sheet, right? It means if a bank custody 1 billion of Bitcoin for their customer, they have to hold $1 billion of cash to offset this liability. Because this is not bank's asset. This is a customer asset. Customer is just saying bank, hey, can you hold it for me? And if bank says yes, then they'll have to come up with another $1 billion of a cash because of this SAB 121 ruling, which was like crazy. Why would we do this? Right? SEC's argument was, gosh, we want to make sure that the customer is protected, because in the crypto world, you will see these frauds happening, and then a customer comes to the bank, and then they realize, oh, whatever digital asset they were holding has gone down to zero, and the customer basically has got nothing. So they want to have banks hold the equivalent amount of a cash on their balance sheet. So that effectively means no bank is going to touch Bitcoin. Because now they have to come up with so much of a cash, which they can't put to use. So that this effectively shut down the doors for the regulated banks to engage in this market. And that is why we are seeing all the custody business is going to Fidelity, Fidelity Digital Asset Management, Kraken. Majority of these Bitcoin ETFs are using Coinbase as their custodian, because none of the banks can do this because of this SAB 121. So it was an overreach by SEC, because then we saw the Banking Association, ABA, American Bankers Association, SIFMA, etc. They wrote a letter to SEC, guys, please change this requirement. They say we will put out a note in terms of how much of the customer asset we are holding, but don't force us to hold the equivalent amount of cash on our balance sheet. They don't do it today for gold. So you go and take your gold and ask bank to hold your gold. If you give the bank $1 billion worth of a gold, bank doesn't have to come up with $1 billion of a cash on their balance sheet. Right? They don't have to do it. But this was specifically only applied to crypto, which was, again, with the tinfoil hat, they're saying, hey, do you want to just kill crypto? And that's why SEC came up with this. The Government Accountability Office, they reviewed this, and their conclusion was this was an overreach from SEC, and the bulletin should have gone through a proper review by the Congress, right? So again, if you want, you can search for this. They came up with their report in October, saying SEC did not submit a report pursuant to the Congressional Review Act to the Congress or to the Comptroller General on this particular bulletin, right? SEC's argument was, oh, this is not a new rule making. This is just an addendum to an existing rule and all that stuff. So we don't have to really involve Congress in it. And GAO said, BS. This exemption, it meets the definition of Administrative Procedure Act. So the exception doesn't apply. So they gave up their report, right? And then the banks, obviously, banks are not here because they love crypto. They are here because they want to make money out of crypto. And now they're saying BlackRock, Bitwise, Coinbase, Anchorage, Circle, Kraken, they are making tons of money by doing the custody business. If you look into these Coinbase, they charge 2.5%. At least that's what their listed price for doing the custody business. That's a huge 250 basis points is a huge amount of money. Now imagine like $50 billion in assets in Bitcoin ETFs. That's like whatever, 2.5% is like 125. It's like 1.25 billion, not 125 million, $1.25 billion, right? In fees. Today, banks are all cut off from that. So they're like, dude, we need to get our feet into this, because they can't see the other institutions making money. They want their piece of the meat. So that's why banks wants to get into this, and we'll see. So there was a bill that was initiated in Congress, and there's in the Senate. It just got just passed by 60 to 38. Remember, Senate is Democrats. So we saw 21 Democrats actually join Republicans in the Senate. So basically, 21 Democrats, they went against Senator Warren, or against the general principle that, hey, Democrats are against crypto, and voted for this particular bill, which will overturn the SAB 121, right? So because they think the crypto is too important, and it could become an election issue in the election later this year. So now this basically also passed Senate. So now it goes to Joe Biden for his approval. Earlier, Joe Biden had indicated that he's going to veto this. It's again, that's a standard line on the Democrats, is crypto is bad. They don't want, it is like whole choke point 1.0, choke point 2.0. We talked about it many times. So now we will see. Now it has passed the Senate, whether he's going to keep his own words, or whether he's going to go follow what Senate has followed. So we'll see. We'll see what happens. But in any case, even if Joe Biden vetoes this, the fact that now some of the Democrats went against their own party folks, to vote in favor of the bill is a huge, it's a momentous occasion in the crypto world. So we'll see what happens. We have elections this year. In any case, this is bullish from the perspective that if banks, and banks are regulated, if you're really worried about protecting the consumers, then why you're pushing that consumers to the unregulated areas? So today, a lot of these scams happens because US consumers, US customers, because they're not allowed to have this with the bank, they'll go to some offshore exchanges, some other third parties trying to buy some of these crypto coins, and those exchanges were fraud. If you can buy this in a regulated financial entity, then isn't that more protective of consumers? So I don't get SEC logic. I know as those who are maximalists on the crypto and the Bitcoin side, they say, oh, no, we shouldn't have a financial or, the centralized authorities involved in it. But look from a purely from a investor and investor protection. I mean, if you're buying through a bank is regulated. They have to make sure that they have enough assets, etc., right? They won't like run away overnight with your private keys and all that stuff. So from that perspective, I think it's bullish. And if bank starts to get involved in this, and if this gets overturned, OCC is already okay with it. GAO is okay with it. And I think, was it 2022? I reviewed that the underlying technology with FIS and all that, which provide a lot of banking infrastructure to smaller banks. That is already ready. That was ready in 2022. But no bank can actually use this because of this SAB 121. And of course, the regulatory clarity is now a lot more than it was in 2022. So let's look at what happening on the crypto side. So, but this was a big news on. Yeah, so nothing much. I mean, Bitcoin has been trading in the range between 60 and whatever 70 for last month or so. Yeah, that's between 67 and close to 60. So nothing much, but I guess it is up almost 10% for the week. And I think a lot of movement came in on Thursday, Friday, after this SAB, this bill was passed in the Senate. Shri asks, what about options for Bitcoin ETF? So doesn't look like that is gonna come in this year. So I am surprised why not, but I guess SEC is just rejecting all the applications. I was listening to one of those Bitcoin podcasts wherein, no, I think it was some podcast related to some OCC folks, and maybe close to the end of a year, where we may see options listed for Bitcoin ETF. Again, it's a guess. Nobody knows what SEC will do or not do, but don't think that. I mean, we have seen even in the worst of these meme companies or this SPAC companies, which hardly had any businesses, options getting listed within 2 weeks. But SEC has been pretty anti-crypto, so I don't think that they're gonna approve it so soon. They already rejected a few of them, so I'm not holding my breath that it's gonna come in next month. I wish it would. It'll be very helpful for me, but we'll see. Okay, so what did I buy or sell this week? Again, this is, you shouldn't follow what I'm doing, but I want to be transparent because we talk about a lot of stocks every week. So I'll do transparent in terms of what stock did I buy or sell. So I bought Meta, I bought JD. I know last week someone asked, hey, can you share the price at which you bought? Right? So it does take me a little bit more time. So I'm sharing the price, but I'm gonna share it only for this week. Okay, at the end of the day, it doesn't really matter. what price did I buy? I mean, what intelligence can you glean from me buying Meta at 464? If Meta today is at 470, does that mean if you want to buy, you shouldn't buy it? $4, $5 doesn't make a difference. Does it make me seem like a genius that I bought it at 464 and now Meta at 475? No, I have no idea that Meta will go to 475 in this week. So today I'm sharing it because one of you asked, and next week I'm not sharing. I think it's just gonna create a little more noise in your own head, and is of no use unless someone can tell me and debate with me that this is really useful. I don't see any use of doing this. Or if say Meta goes to 450, right? Do you think it now suddenly become much better buy? No, it could go to 450 because Meta has decided to invest in some another next shiny object. It really doesn't matter where Meta goes in a week. So, but because last week I made it, that's what I'm sharing. Next week I'll just tell you what I bought or sold. Okay, I forgot who asked me. So there you go. Okay, for this week you have the price. But I realize that there's gonna be a little more noise than any meaningful information that you can derive from here. Right? So don't want to talk about JD. So JD, it's a new ticker that I added. Again, this is very tactical. I don't generally do this because I've got some money coming from this, KWeb covered call assignment, which I don't want to defend. I wanted to rotate into some other Chinese player. I already have exposure to Baba. So I thought maybe let me pick some JD. So I'm not increasing my exposure to China, but just rotating a little bit of a capital. Again, I'm not done study in JD, but this is just, I did basically, get my little feet wet. And if I find it more interesting and worthy enough to add one more ticker to my portfolio, then I'll buy more. And then when I buy it, I'll come and talk about it that, okay, I bought it. Okay. So this is Meta is my long-term. This is just I initiated this week. Again, I don't know whether I'm going to keep it or not. I immediately had a covered call at 36. I sold a covered call at 36. This is like very tactical move while I wait for opportunity. What did I sell? I didn't sell a covered call Snap at 14. I had a covered call. I don't want to defend it. Let it get called away. XLF at 40, GM at 42, KWeb at 27. So I'll be happy to have all of them called away. I don't want to I think I defended. I rolled out one of them. KWeb had another one at 28 or something. So I let go, get a sign on one of them and rolled the another one at 28. Any questions? All right, let's move on. A quick update on the boot camp. So we're done with the first 5 sessions. Number 6, I changed my mind. Oh, I didn't put where the number 6 is. Anyway, so I know during this bootcamp session, I told that number 6 would be building an options portfolio. But then while I was thinking about it yesterday, I realized there were a lot of questions around pricing and the fact that June 21st is now close to 4 weeks out. So we should talk about risk of early assignment and things like that, because it does happen that sometimes you get assigned. So I thought maybe next week I'm going to talk about option pricing and the risk of early assignment. And then drill number 7, we could do building an options portfolio. So I basically, okay, I forgot to put that in. So I basically switched it, and we're going to talk about how to identify if your option trade is at risk of assignment or not. The meetup, the session is already scheduled on the meetup. This is the one. So already scheduled. We meet every Wednesday, like you guys already know, 6 p.m. to 8 p.m. Pacific. We're gonna figure out early assignment risk. That means we're gonna talk about option pricing. What are the factors that impact option pricing? This will also include a little bit of an introduction, not getting into the details of deltas and all that, but only till the extent that it impact option pricing, right? A little bit of a delta, gamma, theta, rho. We're going to talk about that. And then how to figure out if your option trade may be at risk of assignment. Good. So that will be our update on the boot camp. So if you have not signed up and if you're interested to learn about this thing, RSVP, and then use this link to register. It is free to attend. So there's no charge, but just register it and make sure you'll have to do the homework. Okay. You get a homework email from me, and then I expect you to submit the homework. All right, the question for those who've been attending the boot camp over past 5 weeks, I seek your feedback. So you guys know I keep the recording here, and then so that you can go back and view the recording and refresh the concepts before you come up for the next drill. So far, this is how the page layout looks like, right? You go to the site members boot camp, you see 1, 2, 3, then you click on one of them, it starts to play this area, right? So I was looking at another layout in which we'll have the most recent one on the top, and all of them are listed here with little more detail in it. You click on one of them, it tells you what the scope is, what the homework is, right? The way I realized that, because someone reached out to me saying, can you give me the link where the recordings are? Because it was the first time he was like joining this boot camp in between, but then I had to extract all the homework, put it in a separate Google Doc, and then share a link. Okay, here's the Google Doc, here's the homework. I thought maybe I can just put it on the website itself so that when you go to the website recording, you have a homework at each one of them. But you guys tell me, which one is better for you? The previous layout, this is almost no work for me. This does involve a little bit of a work, but I'm okay to do that work if it helps you. Vote for layout 1 or layout 2. Come on. I know many of you do participate in, and let me just launch a poll in front of you. And coffee gone cold, it's okay. I'll give a little bit of rest. Get some rest. And so this is layout 1, layout 2. Layout 2, when you click on it, you get a homework. You see what the homework was. Layout 1 is just a video. I'll wait for 15 more seconds. Two here. And then many of you have voted. All right, we hit our minute mark. All right, 2/3 says layout 2 and rest says layout 1. Some of you on the chat says layout 2. I don't know if it's an overlap or not. Okay, I'll switch to layout 2 over the weekend. Maybe I'll make a change tomorrow to the website so that the layout 2 starts to show up. Today, if you go, you will basically see a layout 1. So thank you for your votes. All right, let's move back to our stock discussions. Some updates from Google. Isomorphic. Heard of isomorphic? What is isomorphic? Anyone? So Google, we all know Google as a search company. Then we all know Google as providing us with, Google Docs and all that, Gmail. But Google has got multiple businesses, as you guys know, and some of their businesses are other bets. Like Google also owns YouTube, but some of the other bets include their Waymo, And one of the other bets, there is another one called start with C, I forgot, which is more around focused on healthcare. There's another one which is a collaboration with the DeepMind and Isomorphic. So they focus on using AI to help in drug development process, right? So there was a, yes, Supal got it right. Yes, that's a moonshot bet on drug discovery. Yes. So there was a huge, I mean, it's a I would say, could update, very pertinent update from Isomorphic Labs. They released the version of their product called Alpha Fold. They released the version Alpha Fold 3. Now, the difference, and I'm not a biologist, I'm not a molecular biologist, or I have nothing to do with biology, from miles away. But my understanding, once I read through some of the blog posts on this, is someone is a doctor or in a medical profession probably can correct me. I know nothing about what's inside my body, except I know there is some blood and some organs. But what the blog post says that till now, till AlphaFold 2, the capability of AlphaFold 2 was to figure out how the various molecules of the proteins will interact and what the end result would be. But it was limited only to proteins. Now, AlphaFold 3 has extended this and will be able to figure out the interactions of other biological molecules, DNA, RNA, and there is one called ligands. I have no idea what that is. Okay, so don't ask me the meaning. But it looks like there are 4 types of biological molecules in our body. Proteins, DNA, RNA, and ligands. Ligands, I think, are the one which act as a binding agent. I don't know whatever they bind. So that constitute our body. Now, if you can figure out what's the interaction between these molecules, how they interact with each other in different environment and given a different stimuli, that will help us to know how my body going to react to any of protein or whatever medicine that we put in. This will be huge in terms of frog drug discovery, to enhance or to shorten the time that it takes to do the drug discovery, right? Because now you can actually simulate and model and see what if I increase a little bit of this spike protein, right? What happens to the body? So earlier you were able to figure out what happens to the proteins, how the proteins will react to it. But then for a DNA, etc., you actually have to literally do it in a clinical lab facility, right? You have to go and take a pipette tube and add that particular stuff into a molecule and then, analyze that molecule under whatever spectrometric machine or whatever that, or microscope, whatever machines you use. But now, if you can do that through AI modeling, that's going to be huge. So if this really works out, again, they'll be giving it to pharmaceutical companies and all that. But if this works out the way it is supposed to be, there's a multi-billion-dollar business. Right? 10 years, I don't see a reason, if it works out the way it's supposed to be, why it can't be $50 to $100 billion business. So that's a huge update. So don't count Google out yet, right? In their other bets, there could be a few other multi-billion-dollar businesses sitting, which we'll not know right now. But if those work out, those are going to be a huge separate businesses in itself. Waymo is another one. If the whole autonomous driving, it's a huge, huge market. And Waymo is like one of the foremost players in that. So I wanted to give you that update on Isomorphic. Other stuff was on Google had their I/O, which is equivalent to Apple WWDC. It's basically a developer conference in which companies come and talk about the latest innovations or enhancements in their products, etc. So this one was focused completely on AI. And why would it not be? Right now, the only thing that market is valuing is AI. So they talked about how Google can integrate into your Google Workspace. And there is a almost 2 hour long recording on YouTube of the whole Google I/O. If you have a time, go ahead and watch it. Or if you want, there is a summary. This is a 10-minute summary of the 2 hour long video. So you can watch this if you don't have a 2 hours, or I can just walk you through some of the stuff. So Google AI integrating the workspace means it can read through all your emails and then can summarize the information from multiple emails. Right? Say if you have a kids at school has sent some email around some forms to be filled. You don't know which other multiple emails that may be buried. You can ask your assistant, say, pull up all the school forms that I have not yet filled. You can go and look at it. If you're a small business and you want to do your receipt, want to get your reimbursement processed, you can go to the Google and say, hey, can you pull out all the receipts that I had sent in this email? Google will not only just pull up all the receipts, it can actually look through the receipts and create a Google sheet with the date of transaction, vendor, what's the amount of transaction, and categorize it. That's a huge, huge improvement. So then they talked about Project Astra. And this video is, I think, the most famous one. Let me see if you can bring that out
in real time.
Yeah, so if you have not seen it, let me just show it to you. This is basically, it's a multimodal stuff. Means
Captured in a single take in real time.
sorry, multimodal means it not only basically you can interact with it via text, via speaking, audio, text, video, images. So this is a 10-minute video. Okay, and I'm only gonna show just Project Astra. I'll skip the others. Let's make sure that it's audible to you.
Time.
What does that part of the code do? This code defines encryption and decryption functions. It seems to use AESCBC encryption to encode and decode data based on a key and an initialization vector, IV. Do you remember where you saw my glasses? Yes, I do. Your glasses were on the desk near a red apple.
Okay, so this summary actually didn't have some of the other stuff on Project Astra. One was that the researcher is actually, scanning the room and asking Google, do you see anything that makes sound? And the Google Gemini responds saying, yeah, there's a speaker. And she takes it to the speaker, and then on the screen, she creates an arrow onto the part of a speaker and say, what is this? And the Gemini responds, this is Twitter, and it makes high frequency sounds. Then the research.
This is mind control. It's doing exactly the same what they do in China. It's kind of people don't realize this. This is really not positive for a quote unquote free thinking society. It's just like Facebook in 2016.
See, if you want the convenience, you have to give up something. So it's a choice that you can make. No one is asking individuals to use Gemini. But if people want to, yeah, there's a capability available. That's all I can say.
No, but what I'm pointing out is that the American people, they don't realize that, they're getting caught into something that they totally don't believe in, into single-minded thinking, rather than, they believe in free speech, a lack of discipline, but, on the other hand, they're getting messed up in their own subgroups.
Okay, so I think this is tangential. So I'll skip that discussion. But all I'm saying is, yeah, Google will know a lot more about you. I think they already know a lot more about you, but you have to use this and forget about Google. Even Apple is now they're tying up with OpenAI, and that's going to be huge because Apple has so much of a data around you personally. The AI on your phone is going to be the next, I would say, frontier for Google or Apple to conquer. Meta probably will again lose that battle because Meta devices are not that omnipresent. They don't have, but Google and Apple both know a lot more about their consumers. So one last thing, the researcher also pointed it outside the window and asked Gemini, "Where am I? Do you identify the location?" And then the Gemini was able to identify that it's a King's Cross in London. That's where their Google's DeepMind office is. So pretty interesting. So that's the project Astra. They also revealed VO, which is like high text to video generator, just like a Sora we have from OpenAI. But then Gemini Flash was for, I think that was for phone, what you can use on your, basically now your AI on your phones. Trillium is there a chip, which is it's a tensor processing unit. So TensorFlow is Google's proprietary, I will call it a software for processing a lot of amount of a data, basically for running your AI and ML workloads. So they also have a chips instead of a GPUs. It is a TPUs. Version 6 will be revealed. Then they also reveal AI overviews. I think this is one of Project Astra and AI overviews are two big ones that I see, because remember when ChatGPT came out with OpenAI came out with ChatGPT, market was, is Google dead? Why would I want to go to Google and get 10 blue links when I can get my answer on ChatGPT itself? And then Google tried to include, basically build its own AI, and they had all the missteps. But that was what market was thinking, and Google stock got punished because, guys, what's your play? So Google came out, and there was another company called Perplexity. So Perplexity basically makes use of, I guess it makes use of OpenAI APIs. If you give it a search query, it'll bring you a lot of other relevant contextual information, not just the 10 blue links. Google did the same thing in AI overviews. So I'm like, now what's the use of Perplexity? They just killed another new startup. So in this case, if you ask for, hey, how do I wash, the example that they're taken is, how do I wash sofa fabric? It's not going to give you 10 search links where you have to go and click on the link and then see, okay, this blog post has correct information on, oh, no, this is not right. I'm going to go to the next blog post or whatever, go to another page and see if that is right or not. It actually brings you the steps right here on the top. Below it, there will be citations from where the data has been collected. And below that, there's a, you can go and actually purchase those things if you want to. So if you ask them for, how do I, make this particular food, they'll give you the steps. They'll also tell you where they got the data from, and then the ingredients are there. If you want to shop for ingredients, it'll be right there on that same page. So now that's a huge improvement in how we used to search, right? So before you think Google is dead and no one will do a 10 blue links, so Google is already changing the way the search works, right? So they are reinventing themselves. Another one was Gems, in which that becomes your like personal assistant. You can actually go and create on your own gem and give it whatever name. And then let's say when you are in your email, you can ask Gem, saying, hey, can you do this? And the Gem will respond to you. Or if you're in another Google, let's say, other Google software, maybe Google Meet or whatever, you can ask the question to Gem. Right? So Gem is like your personal digital assistant. It stays with you wherever you follow. You can actually tell Gem, when you create a Gem, you can tell him what you want to be. Right? You can ask him that, hey, I want you to be a data analyst. And then when you are in a Google Sheets, you can ask a question to Gem. And lastly, they also revealed how they're gonna have all the Android stuff, or Android enhanced with AI. So I'm still bullish about Google. I think the whole idea of the AI gonna eat Google's lunch was overblown. Still, despite all the missteps that Google had in catching up on AI, uh, and I think they still have to figure out. It's still a little bit of confusing. We had a Bard, then Gemini, no Gemini Pro, Nano, then in between that about Vectra. So still some cleanup to be done, but I guess you just can't write it off. Write off such a big company and a huge cash flow generator company. Not just a company, but they generate a lot of cash. Right? So you can't just write it off. So that was on Google. Any questions on Google? So as you guys know, I hold Google and I still continue to hold it. I was first I saw OpenAI. As compared to the OpenAI, I think Google looked more corporatized version, more scripted, not that wow factor as much as I saw on OpenAI revealed ChatGPT 4o, which is for Omni. That was really, yeah, I get it. This was too much of content and too much scripted one. But yeah, a lot of good updates from Google. So since we talked about AI, let me just jump onto the AI stuff first. Then we come to them, or maybe we'll skip the money math lessons because we can do that next week also. That's a timeless wisdom. So let's talk about the AI ecosystem, and then we'll come back to 13F filing. All right, so I was thinking about AI and, the whole stack of AI and what are the different players. So when we talk about AI, majority of us knows, hey, if you have to invest in AI, you basically buy NVIDIA or buy, AMD. That's just one layer, right? So looking at the different stacks of how an AI solution will be built, AI that will be useful for you and me as a person, what gets involved in that? Let's look at all the layers. And then we talk about, hey, what are the different opportunities? So first at a hardware layer, wherein the chips. One is the chip designers themselves, which is where the NVIDIA, AMD, Broadcom, Marvell, they come into picture. Me personally, I don't know who's going to win of these. I would rather say, chip manufacturers, which is TSMC, Samsung, Global Foundries, and Intel, maybe. But the most bullish one is on the TSMC because they have the largest market share in high-end chips. Next, okay, chip manufacturers are going to manufacture the chips, and these are the fabrication plants, but they need the equipment. And if we continue to have the need of these chips, whether it will be NVIDIA chips that we'll be using, or are we going to use the Google created TPUs, or are we going to use Apple M10 chips? Eventually, these need to be made by the same folks, very few folks like TSMCs, etc. And they will need these instruments created by these companies, ASML, LRCX, Lam Research, AMAT, yeah, KLAC. So we had done, so basically everything that was in a semiconductor value chain. Again, I think one of a previous session, I did all the companies, and there are a few more companies that are involved in semiconductor value chain, right? Cadence, Synopsys, all those could be investable. So it's not just NVIDIA. So me personally, my own capital, I've put more capital on TSMC than NVIDIA. Reason? Gosh, NVIDIA's margins are so high that Amazon, Google, Microsoft, and Apple will say, gosh, we're not going to pay so much money to NVIDIA. We're going to create our own designs. NVIDIA doesn't manufacture chips anyway. So we'll create a design, we'll have TSMC manufactured for us. So that's like, instead of me putting my eggs in NVIDIA, I'm like, let me put it in the, like picks and shovels play, right? Doesn't matter which designer company will win, whether it's AMD, NVIDIA, or Google. Eventually, all of them will go to TSMC. Majority of them will go to TSMC. Some are also going to Intel to get their chips made. So that's one. So now you got your hardware all done. Not yet done. Let me go back to, I think there was a little bit somewhere. Where's my other hardware provider? Okay, so not, okay, we'll come back to that. So let's say once you have your chips done, then you need a software layer, which is that's where the software models comes in, like large language models, LLMs. Many companies provide that. Meta has got their own, which is called Llama. Google had their Gemini. We just talked about it. Microsoft has bought OpenAI. They have a huge stake in OpenAI. And then you got a Perplexity, Anthropic, in which Amazon, Google have their stake, Cohere, Adapt, etc., etc. From a investable perspective, I think Gemini, Meta, Llama, but Llama, they don't make much money on Llama because this is open source. But if this becomes a de facto standard, maybe some years down the line, Meta can start to charge or give some additional functionalities on Llama, which is not available in open source Llama. Microsoft using OpenAI. So at the end of the day, it's like Google, Microsoft, Amazon, Meta, because even if you have these large language models, how are you going to use it and consume it, right? It's going to be one of these folks. Third one is you need a lot of data. You got a model, but models are useless if they don't have a data to work on. First, they need a lot of data to train your models. So that's where data keepers will come in picture. For enterprise level, right? If I'm an enterprise, you'll have Amazon, because a lot of enterprise have their Amazon, a lot have their data on Amazon S3 or Snowflake. Snowflake is also coming with its own models. Databricks, Oracle, or any other ERP providers. Me, I'm mostly bullish on Amazon, because Amazon can provide you end-to-end solution. If you go to Snowflake, yeah, your data is in Snowflake, but then where will you train it? Maybe you'll have to move it to Amazon and all that stuff. But again, these are all the players. I haven't seen much from an Oracle. Does anyone know which is Oracle? Oracle is tying up with whom for AI? I haven't seen much news. I don't follow Oracle much. But if anyone else, if you're aware, let me know.
Excuse me. On that thing about Quora, it's really bad now. They have tons of bots and a lot of uh it's really bad now. That's
Yeah,
all
so I'm not commenting on the quality. I don't know if how much is the data, is a good data even in Reddit, right? So the other one would be X. Right? So that's a public consumer data. Now this is the enterprise data, which is like protected data. This is a public data, which is companies that have got tons of data. They can actually sell their data. Reddit. Remember Reddit S1? I mean, I still don't like the management of the company, but I'm like, only way this company would survive is if they can sign more deals, like they have signed a deal with Google to sell the data. And I think this week they signed up another deal. I don't know with whom they recently signed that deal. Maybe OpenAI or maybe someone else. But that's the only I will treasure that they have is original curated data from end consumers. Now, could there be bots? Sure, we don't know. Right. Same is the case for
the thing with Reddit is it's inaccurate, just like Quora. You don't know where it's coming from.
Yeah, I mean that's a risk anyway. I don't know. If don't we have a bots on Meta? We do have. But that's all we have, given the constraints that we have. This is the information that we have. Private consumer data, right? This is a public consumer, this is a private consumer data, and I'm more bullish on this side. Yeah, let's say you trained your AI model on Reddit, but that doesn't know anything about me because I'm not on Reddit. Right? But if, and now Apple is tying up with OpenAI, And now imagining if Apple comes up with their iPhone, whatever the next version of iPhone 16, and then say you have your AI assistant on this phone, which is trained and respond based on the data that we have on you. That's a private consumer data. Which companies have that? Google has it, Apple has it, Amazon has it, Meta has it. Because these are the 4 or 5 properties, digital properties that we use to run our everyday lives. And not only that, you need to have a data, you also need to have either you sell the data to someone else, or you need to have a way to monetize the data using one of your own applications. Google, they got the Pixel phones, they got the YouTube, they got a search in which they can know who exactly I am, and then can basically monetize, use the AI to show me the content which is relevant to me. Apple, same case. Amazon knows about shopping habits. Meta knows about a lot more about your life. And now X. I don't know how X, but X doesn't have an outlet wherein they can consume this, except, yeah, I'll show you relevant posts. Meta, maybe with their Ray-Ban and Google Glasses, maybe if that becomes more popular, they'll be able to use that. So these are where the companies that have tons of data. Next is the solution providers. Okay, now we're talking about a solution provider for mostly enterprises, because when it comes to the consumer solution providers, is going to be the cell phone, the companies that owns the cell phone or the social media properties where we spend most of our time. When it comes to the enterprise solution providers, that's where you see Snowflakes and the Databricks and the Palantir cloud providers, which will give you compute power, LLM models, and storage at scale, right? Which means all the 3, your Amazon Bedrock, Google Gemini, Microsoft OpenAI for the companies. Or there will be companies who will make money by doing a consulting or tech work. Now this opens up a new source of revenue for all these tech consulting companies. Pack in E and Y in this one. We can help you and give you a blueprint for your AI strategy. Another source of revenue. Along with the technology, it cut both ways. It got the positives, and then the same power can be used by bad actors, and which we already start to see the impact of that in terms of using AI to create more and more phishing attempts, cyber attacks. So cybersecurity companies will do, those who have built protection against those will do good. Finally, application providers, I think, is almost the same. It is the, like, when I say application providers, means the one which are building the software that you and I use, which is mostly cloud providers. Now, this is an open, right? Companies using AI. So today we are seeing a lot of companies getting reevaluation because they're using AI. I think any business that use AI effectively, they're going to reduce the cost and hence increase the margins. But I guess this is where right now it's all hype. Eventually, this will cease to be a differentiator in business. It's like you go to late 1980s, way early 1990s. You can come and talk about it. I got a website. That was a differentiator. That was helpful in your business. Once everyone has a website, it ceases to be a differentiator in your business. So, but make hay while the sun shines. But I don't think that this is going to be a long-term investing thesis that, hey, my company is using AI. Because when everyone has it, no one has it. No one talks about the fact that we use computers to run our business. Sure, 1960s, companies will talk about it that we have computerized our financial statements. We bought so many computers for our accounting department. cease to be a benefit, cease to give you any differentiation right now. Same thing will happen with AI. Computer makers still make, money. Dell still makes money. Computer providers still made money, but having a computer cease to be give you any upper hand as compared to your competitors, because your competitor also has it. So I don't think this is going to be a big long-term investment thesis. Since we talked about the hardware side, I want to go one level below the CPUs, wherein basement level, wherein your data center providers. If we think AI is going to be the next revolution after internet and mobile, next is going to be the AI, we will need more and more capacity for running, those chips need to be hosted in a servers and to run that, and we need the data centers for it. So there are few data center REITs. Digital Realty is the biggest one. You got a Equinix as a REIT. Do your homework before Equinix, because there was a short report that I covered in one of the sessions. I think Vantiv is another one. Energy providers. These chips consumes a lot of energy. So that's why we are seeing all the XLU is going high. You can pick up some energy providers over there, or electrical components like Eaton Corporation, which provide power management solutions. We need tons of power, so any company that makes it easier to reduce your power bills is doing good. Or finally, the chip and server integrators, right? Super SMCI, Vertiv, etc. So I think that covers probably the whole stack of AI. Did I miss anything? Anyone thinks about any other companies that you might have heard about it and we have not covered? Okay. So yeah, now NVIDIA is the bellwether when it comes to AI. NVIDIA is about to report a result next week, I think 21st. That's going to be there. Now 21st May is the most important week in the history of the stock market for this year. We'll see how it goes. But NVIDIA has continued to put up a great results. I thought NVIDIA was overvalued, but they continue to, the business continue to grow into that valuation. So we'll see what happens to NVIDIA next week. Where is Intel in comparison with the rest of the AI companies? So Intel's play is now they're becoming a competitor to TSMC. That's the play I think that's the only play that Intel has. Because Intel makes chips. Either Intel will use AI and come in this category, company using AI to transform their business, but that's not going to be long-term sustainable moat because everyone will start to use it. Or the other way where Intel goes in is chip manufacturers. Intel doesn't even have a plants yet. Right, they are building a new plant in Arizona and in Ohio to produce the next generation of chips. So it is going to take time. Only investing thesis on Intel will be it's a strategic asset, and maybe US company won't let it die because that's the only foundry that is like US foundry, right? The biggest ones are TSMC, Samsung, and then there's global foundry, but that's pretty small. Intel is the only biggest one. So if we lose the whole know-how of how to manufacture chips, that's going to be pretty bad because the next 10-15 years is going to be decided based on who can make use of these technologies for which we will need chips. We will always be dependent on foreign companies, and that's why US is forcing TSMC to open up plants in US, and TSMC is opening plants in US. But that's the only play. Intel did get the most advanced machines from ASML 2 or 3 weeks ago, but I guess it will take time for them. So I'm not going to bet a lot on Intel right now. It's a turnaround play. Now, whether they can turn themselves around or not, it will take time. should have at least 5 years of patience if you want to invest in Intel. I own some Intel shares, but I got to be patient. Supal says, given that AI thesis will play out like mobile or cloud or internet before, shouldn't basket strategy be some of the key layers in the whole AI stack? Obvious. Yeah, go with the basket. I mean, we don't know. There are very few areas in which we have individual winners. These are I think, two areas where I look at where we have very few companies. There is either one or two companies that do it. On everywhere else, there are multiple companies. You don't know who's going to win. It's too early to crown NVIDIA as a winner for AI race. Maybe there will be some other company that will come out. We don't know. We'll know only after 5 years, where we are. We are way early in this. So that is right now, it won't be good to put all our eggs in one particular company. We don't know who will eventually be the winner. Whether there'll be one winner, multiple winners, we are very early. Dave says, for NVIDIA Wednesday earnings, I'm going long. I own NVIDIA shares, so I am already long. So I'm not buying any calls, etc. So are you selling Intel weekly at the money covered call? No. The Intel is what, 30, 31? I will sell. I'll start to sell some calls once it is above. If I can I want to keep a strike price near 40s. Right now, there is no premium in 40. Again, it's a very small position in a portfolio, so I'm not too much worried about it. So that was on AI. Anything else? All right, we hit our 12:08. Let's quickly go through 13F and then we'll call it done. So we'll skip some of the other stuff. Ready? Okay, brace yourself. It's gonna be a dash now. Berkshire Hathaway. I think the notable stuff on Berkshire Hathaway, in their annual meeting, he mentioned that they're building a stake. Looks like that was Chubb. It's where Berkshire Hathaway was building the stake. So they bought what initiated position in Chubb, which is now 2%. Other than that, we already talked about Apple. Berkshire has been building position in Liberty, Sirius XM. I think these are the only three main things I saw. Apple, we talked about earlier. Chubb is basically it's an insurance company, which Berkshire Hathaway has been buying, and Liberty, they've been buying it for quite some time. Nothing else. Carl Icahn from Icahn Capital Management. IFF, International Flavors and Fragrances, added. He increased his position in this one. Other than that, I mean, yeah, 1%. JetBlue they bought, but it's only 1%, so not a huge part of his portfolio. So IFF, if anyone is keeping notes, maybe that's a takeaway from Carl Icahn is IFF. I have no idea what that company is. So let's move on. Bill Ackman, Pershing Square. As you guys know, he runs very concentrated portfolio, 7-8 companies. That's what we see again. So a little bit of Chipotle, Hilton, QSR, Google, nothing else has changed. So we looked at his annual report few weeks ago, and where he talked about why we invested in some of these companies. We also looked at his investment thesis about Google that was very well aligned with what I was thinking about Google. So good to see that he has not cut his position on Google at least. So that is Bill Ackman. Bill Gates, another Bill. Microsoft sold a little bit of Microsoft and he sold a little bit of Berkshire, but I don't think there's any takeaways from here. He still owns 15%, 16% of this. I think this billion, that foundation is still Berkshire. So, and 33% is in Microsoft. So not a big change. Okay, let's move on. Li Lu. For those who don't know, Li Lu is a person to whom Charlie Munger had entrusted his personal wealth with Li Lu. I think it was Lilu only. He came from China to study here in US, didn't know English, so first took English classes, and then I think did double masters, etc. And during while he was in college, maybe he went to Harvard or one of this Columbia, one of this great business school. He started with a couple of $1,000, and by the time he finished college, he was up like a few $100,000. There is some fascinating story about Lilu. Yeah, so I might be getting my numbers crossed here or there, but there's some fascinating story about Lilu, and Charlie Munger has entrusted his own personal wealth to Lilu. So again, Bank of America, Google, Berkshire, no changes in his portfolio. Moving on to the next one, Terry Smith, CIO, CEO, or whatever, the owner of Fundsmith, operates out of UK. If you really want to invest in growth companies, he has a book. He's written a book. I really loved reading his book, Investing for Growth, from Terry Smith. What else? So I think so he bought Apple 40net Texas Instruments, but new position is initiative Texas Instruments, but less than 1%. Yeah, so nothing much. Okay. What else? Let's move to Prem Vatsa, Fairfax Holdings, operating out of Canada. BlackBerry, he was one of a big backer of BlackBerry. Only 10%. I think he sold some of his positions. Maybe he sold it in like not in this quarter, but prior quarter. But he used to have much bigger holding in BlackBerry. And what else? He got Occidental Petroleum, Orla Mining, Capri Holding, Spirit Aerosystems. If you think Boeing is going to buy them back, and if that means, the shares will see some bump. I don't know if that's his investing thesis, but Boeing wants to bring back Spirit Aerosystems under its own fold. So first they spun it off, now they want to bring it back. Howard Marks, the best guy on risk management, runs Oak Tree Capital. What did he buy? He bought Vail, Freeport McMoran, gold. So gold, copper, mining. So looks like Howard Marks is all into commodities, or at least what he's adding is commodities. All others are like less than 1%, so I didn't go in this. But Vail is a mining company from Latin America, and then FCX is a copper, and Anglo Gold is a gold miner. So that's Howard Marks. Monish Pabrai from Pabrai Investments, he'll all in coal. I think this is the one where he files 13F. Probably has other funds which are less than 100 million, so it doesn't have to file in, but this one is all coal. What else? Chuck Akery of Akery Capital Management. There is I think it's called, there's a book on Chuck Akery, I think called Three-Legged Stool. Oh, so Three-Legged Investment Thesis from Chuck Akery, something like that. I forgot it. What did he buy? He bought Uber, initiative position in Uber and CCCS, whatever that. I never looked at that stock. Everything else was existing ones, but he bought on Uber. So these are like a value investors, Chuck Akery. Francois Rochon, Giverny Capital. What's the new buy is Booking Holdings, 2 billion asset under management. Markel, added a little bit on Markel. The highest position, the biggest one is Berkshire Hathaway, Amtech, Meta, Carmex, Markel Group. 5 below. Surprised to see 5 below such a huge position here. Tom Gaynor of Markel. Markel is called as like a mini Berkshire. They have the same business model like Berkshire has. Markel has a insurance business, and then the float that they generate out of insurance, they use it to do their Markel Ventures. So looks like Markel's they hold Berkshire Hathaway. That's the biggest position. Then Tom Gaynor added DE. In Watso Analog Devices, Microsoft, Apple, Diageo. So got a DE from Tom Gaynor. Yeah, all others are too small. Okay, what else? By the way, I do hold Markel in my portfolio. NVIDIA only sold a little bit of a too simple. Didn't add anything. Daniel Loeb, third point. Top buys are Google, Amazon, S&P Global, Advanced Auto Parts, Meta Platforms. Top holdings are PG&E, Amazon, Microsoft, Bed Body Works, Meta Platform. David Tepper, Appaloosa, Baba, Adobe, FXI, Oracle, PDD. Yeah, 2 minutes. Time for lunch. So we'll just finish it and then I'll go. And currently, David Tepper, wow, the largest holding is Baba. I didn't realize that David Appaloosa has the largest holding is Baba. I know there are some others who it does hold Baba as their top position. Amazon, Microsoft, Meta, NVIDIA, right? The same names keep appearing. If you look at all these big institution holders, Amazon, Microsoft, Meta, NVIDIA, Google, these names keep circulating as their top holdings. Stephen Cohen, 0.72. IWM puts, he bought puts on IWM, Broadcom, Fox, PayPal, Edward Life Sciences, but the positions are too small. Oh, he added 0.69%. So the biggest positions are S&P 500. Oh, I think we should ignore this, puts and the calls, because the way they report it is their nominal value and not how much of money they spent in buying the put. So it's a little, I would say, doesn't give you a correct picture. It tells you, looking at this, you would think that 2.5% of his portfolio is invested in buying puts on S&P 500. Gosh, he may be too much bearish about the market. That's not the case. This is basically the strike price, the nominal value of the strike price, which is completely different. So I think this is, yeah, this, I remember the FinTwit went bonkers when they saw Michael Burry's bought so much puts. I was like, dude, this is not how much he has paid. This is the nominal value. Stanley Druckenmiller. So he sold off a little bit of S&P and some of the stocks, and he bought call options on IWM because it looks like maybe Fed will decrease the interest rates, and that will be good for small and medium businesses. Coherent, Natera, Discover Financial, Woodward. Biggest positions, Microsoft, Coupang. Coupang is, I think Bailey Gifford sold out of a Coupang, I guess. But this is South Korean e-commerce company. Bailey Gifford, Argentina investment by Druckenmiller. Yeah, I heard about it. And all he said that I went to Perplexity. Perplexity told it, give me the top liquid ADRs in Argentina, and then we invested. Then I studied. So there was like a fun story of Stanley Druckenmiller saying, that how he invested in Argentina. And there were a lot of memes around it that we guys are looking into all the 10x, 10Ks and annual reports and all that stuff. This is how Druckenmiller invests. Obviously, I think he, first of all, he dipped his toes. Then he started doing his research. He quoted George Soros saying, invest and then, what was it? It says, first invest and then investigate. Yeah, invest and then investigate. Bailey Gifford, I follow Bailey Gifford because at times he's able to find out the right companies at the right time. Early investor in Amazon, early investor in Mercado Libre, early investor in some of these like Spotify and all that. So He's got a new holdings, which is Brazilian neobank, meta platform Coupang. He had a lot more in Coupang. He sold off. He added now a little bit of Coupang. I thought he also, no, I think he sold, I guess, Neo. What else? So right now his biggest holdings are Nvidia, Mercado Libre, Amazon, Spotify, Moderna. Belly Gifford operates out of some of those tax havens in Europe. Michael Burry, no changes. None filed in Q1 2024. So that's all quick 13F. Questions. Where do you get the summary? See some of them in balance, not the details like all in one place. Some of them from Twitter. This one, the ones that you see, these green, these ones currently, this is from Whale Wisdom. Whale Watchers. This one is Whale, I think it's Whale Wisdom. Or let me just see, because I went to that URL just yesterday. Yeah, this one is Whale Wisdom. And then, you know, sometimes I find the right folks on Twitter who would have done some work for me, then I'll just show those. But this one is from Whale Wisdom. Cool. All right, guys, time for lunch. So I already got called out, so I gotta go. Okay,
One question for you.
sure.
This looking at this information, some of these guys sell out all their positions by the next time you get the report. What
Sure.
is the point in looking at this information?
Some people want to know where the big money, what they've done. So this information, first thing, this information is as of March 31st, 2024. So this might have changed since they've done it, right? So I guess a lot of people are interested in seeing what's the so-called smart money is doing, right? That's why I bring it up when we get some, you know, once in a 6 months, I'll bring it up when we have this 13F filing coming in. Now, personally, how do I use it? My only way to use it is, okay, you know, I'm not going to buy this because Stanley Druckenmiller has bought. I bought Coupang because I had my own investing thesis on Coupang. But sometimes you feel good, okay, there's someone else along with you. And maybe next quarter, he could change it. But if I'm still bullish, I'm still going to hold it.
Yeah, well, that's a good point. The other thing is the people who are selling out most of their positions from one quarter to the next quarter, you should drop them off your watch list altogether and just go with the people who do not trade so much and add to the position or move some of the positions to a lesser amount. That would be the better way of looking at them.
That's a good feedback. I'll have to figure out if there is a way to you know, filter that out. Because right now I have the list of, okay, these are the folks I want to look at, and I just go and start to, you know, pick it up. But yeah, good. If someone is like too active, which is what I don't want to be, and then what's the point of following those who buy and then sell? Right? Bill Ackman, good person to follow. Of course, Berkshire Hathaways and all that. ARKK. Yeah, ARKK I don't want to follow because, you know, that's like, they're like a day traders. And every day you can get a report from ARKK on what they bought and sold. You can actually subscribe to that report. And they'll write, ARK Invest will email you their daily buys and sells. Ramesh J says, I check out top 10 from ETF to invest little at a time. Cool. Sona, do you have a YouTube? Yeah, but I'm not too active on YouTube. I hardly have any time. I mean, I'll put up this recording on YouTube. Beyond that, not much on YouTube. So let me just share this
Thank you, Vivek.
YouTube channel. Alrighty, guys. Thank you, everyone. And I'll talk to some of you.
Thank you very much.
Cool. You're welcome. I'll talk to some of you on Wednesday in the options bootcamp. The rest, we're going to meet again next Saturday. Bye bye.